This segment is brought to you by Zenith Bank.
Your financial reputation can influence your ability to access loans, to secure business funding, rent a home, or achieve major financial goals. But building a strong credit profile goes beyond simply borrowing money. It requires responsible financial habits, timely repayments, a clear understanding of how your financial behavior is perceived by lenders as well as institutions. Now, to discuss what it means to have a good credit score in Nigeria, we're joined by financial analyst Kalu Aja. Good morning. Thank you very much for joining us.
Hi, thanks. Good to be here.
Good morning. What is a credit score? Does it really hold weight in Nigeria? How does it work in Nigeria? How important is the idea of a credit score really?
Score.
Well, a credit score is simply a number that tracks your credit history. That's a very, very simple way of putting it, right? Nigeria, we have 3 credit bureaus. And the idea is when you take credit and you pay back, they record it. And the more you take credit and the more you pay back on time, and how much credit you keep on your books determines that score. Usually called a FICO. I'm not sure what Nigerians call it, but usually called a FICO score or credit score. And that's essentially what that number is. So if you have a higher credit score, then of course you can borrow at a lower interest rate. That's just the summary of it. It's a very important score because you can have the same income, but if you don't take debt, if you don't take credit, of course you don't have a credit score. You pay higher than someone that has the same income with you, but takes credit to have a lower score if it pays back on time.
Now, Kalu, this, from your analysis, I guess it only applies to taking credit from financial institutions. If you take credit from individuals, it won't be computed in your credit score, just to be sure of that. And how much credit do Nigerians have access to? Because, I mean, the United Kingdom and other countries, you could buy a phone, refrigerator. It's almost like a credit-based economy, but we're slowly seeing that Nigerians, thanks to the digitalization of banks, offering those kind of services. So those 2 questions.
Yeah, so yes, it has to be from a registered or licensed credit agency. If you just borrow money from your friend that is not licensed and cannot be tracked, then of course the credit bureaus would not know. It has to be an institution that can send the report to the credit bureau. That's one. To your second question, in terms of credit Nigerians are borrowing, not a lot. There's a company called, an organization called EFINA, Enhancing Financial Inclusion in Nigeria. They track these numbers. The numbers have been very, very low, especially from the formal credit organizations like banks. Nigerians are not taking a lot of loans from banks. Consumer credit in Nigeria is very, very low. We have a lot of guys doing the banking, the loan apps. That seems to be a bit more popular, even though it has higher interest rate. But the numbers of Nigerians that take loans from commercial banks is little about 5%. And we're talking from inception till today. So not a lot of consumer credit is out there in Nigeria. So credit loans or credit bureaus are still a new thing in the country. We're still getting used to how to access credit, how to use credit for consumers, or even for a mortgage. But very, very low numbers across the board in Nigeria.
Now, Kalu, I just want to follow up on what you did mention. I mean, and it's quite shocking that Nigerians, especially in trying times like this, and of course, like you said, the banks offer better rates than some of these apps. Why are they not flocking to the banks for credit? Is it that these products are not advertised properly, or it's a cultural thing?
It's a cost thing, really, and it's also like a regulation thing, if you can use that word. Banks require more documentation. They have to adhere to credit guidelines issued by the regulators, which make it a bit stressful for the rank and file Nigerian to walk in and get a loan. If you want to get an auto loan, you go to your bank, you have to go open an account, they have to have your utility bills, all that stuff. Most Nigerians think it's a bit much. But you can go online on your phone and you can request for a loan and get a loan in maybe 48 hours. So just the ease of getting a loan from the loan app seems faster, even at a higher, very, very high interest rate. Banks haven't broken through that offering consumer credit to Nigerians at scale. There's a lot of loans that they give to maybe the conglomerates, the multinationals, and the high net worth individuals, but the consumer credit at the very, very base level to the students, to the workers. We have some banks doing it, but not say to someone that isn't employed in a formal organization. That's really where the problem is. If you don't really have a job in a formal organization where you get a steady salary, it's very hard to get a loan, consumer credit in Nigeria.
That's going to be really tough. But let's also look at the challenges that some of these banks could face. I mean, if you were running your bank, would KYC be a major problem, knowing your customer? Because these days, we're also struggling with data breach. We're struggling with even collating data. So how can we move from data issues, having the right data before we start going into credit score and knowing your customers? How does these three things interrelate?
Well, you see, in the past, it was hard if you owned a bank to know who a Nigerian was, because you have to know who you are lending to. This is the KYC, know your customer you're talking about. But today, you've got the GSM phones, right? You've got don't forget NIN. Now, if you are a financial institution, simply taking the phone records of a Nigerian tells you a lot. How much does he spend on phones? Who is he calling? What time does he call? Gives you a profile that you can use to build out a financial score for that person, even without going through the normal Naira Kobo that you need. So it's easier today with AI, with how Nigerians use their phones, even where they live, how they get to work. You can ask all those questions. They are non-financial questions. And you can build out a profile that tells you if this person spends this amount of money on his cell phone, he lives in this area, this is what he buys. You can give them a score, and basically you can then lend to them. Look, India did something like this a long time ago when they wanted to do their credit scores, where they give the NIN numbers, the BBN numbers came from the banks themselves. Same with Kenya, where you see that the cellular phone company that was very popular there also gave its own numbers to individuals that they could use to then track usage, and then use that usage to then determine a credit score in quotes for them. So banks really don't have a big excuse now why we're not doing a lot of consumer credit, because it's much, much, much easier now. And we should be doing much more than we're using. We have to get a bit more innovative and not just rely on the normal, traditional KYC to give folks credit.
Let's now also talk about the role that fintech plays in affecting one's credit score. Lately, we've seen that people with just a tap of a button can borrow money from one fintech app or the other. It's like they're even begging us. Every time you're getting one alert, they're telling you you're eligible for 500,000 naira, you're eligible for 1 million naira loan. How can these apps affect one's credit score as well?
Yeah, it's I won't use the word carefully. It's very kind of dangerous. Credit is dangerous. It's easy. You can get credit. You can build out your asset base, especially when you are just starting your employment and you don't have a high salary. But once you don't pay back, that's going to be one of the biggest drags on your credit. Because the way credit is calculated, if you pay back on time, that's 35% of that total credit score. The amount of debt you are carrying is also 30% of that credit score. So just paying back your loan on time and not carrying a balance exposes you to 65% of the total score. The rest is going to be the type of credit, the mix of the credit, and how long you've had the credit. But those two are very important. So if you take a loan and you don't pay back, it's going to be massively a big deal for you. That it's going to draw your credit score really low, and it's going to affect you. You then need to clean that credit score up before you can get a new loan, which then means it's worse off for you than if you didn't have a credit score. It's better you don't have a credit score than have a bad credit score, because then you have to clean that up before you can access a loan. They now know you as a bad borrower before you are just a no borrower, which they can take a chance on you.
Now, Kalu, let's talk about one of the things this government has touted as one of its greatest achievements in this administration, NEL Fund. Will NEL Fund, failure to repay your NEL Fund loan, can it be added to your credit score? And also, the second leg of my question is, what rules of thumb exist so that you don't get into that rut of a debt cycle and you keep going back? Because the economy is tough. There are people that know all this apps. They have about 4, and they've taken money from all of them.
So they
and
take
they're
money from
struggling.
one to pay the other.
Yeah, credit card, you take from one, you refinance one other. So great question, the NEL fund loans, right? The way it's structured, even before you get the loan, they had wanted you to get a guarantor. I think now it's a bit more streamlined. You can get that loan if you're in school and all that kind of stuff. And the way I understand this setup is that you will pay the loan back when you are working. It's not going to be written off, but they will not charge you interest till you start to work. So technically you can graduate. If you don't have a job, you don't pay back. But once you get a job, you have to pay back. And it sits on your credit scoring. It's a loan that you are owed to the federal government that you then have to pay back. So I've argued that it should be free, but hey, it's a loan. So if you take it, be aware that you want to try to get that loan, get it off your books as soon as possible. There are no term limits, which means you can spread it out, amortize it, and pay it off, right? To your second question, how you can stay away from the debt trap, try to only borrow for income-generating purposes. So if you have a loan app, you shouldn't take a loan to start a business. You shouldn't take a loan to eat. I know it sounds cool, but you shouldn't take a loan
to survive.
because you have...
Benga, are you listening? You shouldn't take a loan to eat.
Don't take a loan because you're hungry, because you want to buy a consumable, because you want to go on a holiday. Take loans that you can invest the proceeds and then generate income. It's a very, very tough thing to do, but stay away from loans for non-income generating purposes. Your salary is what you want to use to pay, to eat, to do your vacation. If you can't afford a vacation, you don't have to go for vacation, right? We're entering into the December period. So if you can't afford it, just chill and start again in January. Don't borrow. Don't borrow for a wedding. Don't borrow for a burial. These things are very dangerous traps that you get yourself into. Borrow for the marriage, right? And borrow to stay alive, but be very careful what you're financing. Don't finance a lifestyle. Only borrow for income-generating activities. It's very tough to say that. But,
honestly, I like that you've broken it down. I do have some questions, because there are people that
want... Are they personal
want...
Are you asking for yourself?
No, I'm asking for people. I'm putting myself in the shoes of people, audience, and viewers, people that are thinking, for example, can I borrow to buy a car? Can I? Because the interpretation would be, I'm going to be paying transport. Instead of paying transport, let me buy the car. But we'll go on a quick break, and when we come back, we'll have you answer that as well.
No worries.
All right, you're welcome back to Breakfast Central. We're still looking at credit scores in Nigeria, what it means, how to have a healthy credit score. And before we went on the break, we're speaking with Mr. Kalu Aja, looking at what you can borrow money for and what you shouldn't borrow money for. So before I went on the break, I asked you about people who want to borrow money to buy cars, because the logic would be they're still spending money for transport. Car is no longer a luxury, it's a necessity. And now this current administration, one of the gains of the current administration would be the MREF. People are borrowing money to buy houses. Would you also consider that a worthy investment?
There's good debt, there's bad debt. What's good debt? The benefit of the loan exceeds the tenure and is cheaper. So let's use that criteria to then talk about a car. It's what type of car you are buying. If you borrow to buy a car and you are paying interest on the car long after the car has been depreciated, that's not a very, very good loan. I know the car is going to be a necessity, not a luxury, but the car is going to be, after 4 or 5 years, it's depreciated, right? But you're still paying a loan for more than that. So be careful about that. So it's a type of car, the cost of the car, the interest rate on the car. That's what you really have to focus on when you want to buy a car. For a mortgage, that's what we call a good loan, because you are taking a fixed loan to buy an asset that's going to appreciate, usually appreciates over time. So you live in that home, you need to pay rent, the home equity is yours. The tenure of the loan is usually going to be shorter than the life of the loan. So that can qualify as a good loan. Again, watch the interest rate, watch the tenure as well, but that's a good loan vis-a-vis taking a loan to, say, buy a consumable like a car or a generator. You've got to be very careful that you don't take the loan and the economic benefit is less than the cost of the loan. That's really what you want to watch out for in those kind of loans.
I mean, I remember while still working at my very, heydays, young, I took a loan to buy a generator and a small TV set.
Wow.
I worked, when it was time to pay every month and they were deducting that money, I could feel the pain. You know, if I had my way, I wouldn't have done that.
The irony is that when you are younger,
Yeah.
that's when you should take a loan. You need to accumulate assets with loans. So you want to buy income generating assets with loans, right? Property, land, shares. You do that with loans because you don't earn enough. And then the hope is that as you work longer, those assets can pay themselves off. So interest-bearing loans for income-generating assets.
Interesting. Income generating assets.
Joe, I
That's
hope
what it
that generator is generating
That generator
money
died a
for
long
you.
time ago. It was just used in the house, so easy to watch Premier League. And I said,
A young Johansson.
but that was it.
Okay. So now let's go for people who already now have a poor credit score and are looking to rebuild their financial reputation. What are some of the steps that they need to take?
It's a very simple process. Great question. Number one, like I said, how you get a high credit score is if you pay on time and you keep a low balance on, especially your credit cards or your personal loans. So when you have a bad credit, it means you didn't pay on time and you put a lot of loans on your credit scoring, right? So how do you fix it? Get a card, pay on time, or your existing cards, start to pay them down. If you start to pay regularly, you are hitting your 35 points. Number two, if you start to reduce your credit, i.e. the debt you are carrying on your personal loan or your credit card, you are also hitting your 30%. So the way to do this, if you have loans, you list all those loans out, list everything out, rank them according to the most expensive interest rate or the lowest amount. You pick what you want to use. They're called avalanche or snowball. Either you pay the most expensive loan first or you pay the lowest balance first, and then you try to eliminate those loans in a planned manner. But those two things is exactly what you do. You don't need to pay anybody. Pay your loans on time and reduce the balance. Your credit score starts to go up. That's how you fix it. In the US, they have what they call secured credit cards, where you can give a bank money and the bank gives you a credit card. That's a fantastic way to fix your credit because you can use that secured loan and then pay and then create payments that are on time, and it helps with your credit score. Also helps you establish your credit score. But you don't get this done, and that helps with your credit score. Yeah.
Now let's
talk
talk about
go on.
the Nigerian Credit Bureau. I believe they're the agency responsible for assigning whether a person is debt worthy or the credit score, so to speak. How does it work in Nigeria? Do we have a credit score system, or the Nigerian Credit Bureau just advises banks on an individual that, look, this person has a bad score, don't give loan to this person? How does it really work?
I think it works the same way. Nigeria has got 3 credit bureaus, 3 of them. I don't name them, 3 of them. And when you go to the bank to take a loan, they actually then run your credit. They do an inquiry called a hit on your credit score. And based on that result they get, it's one of the criteria they use to approve or reject a loan. They use that. They also use something called a debt to income. Because even though you have a good credit score, if you can't afford the loan, then you won't get the loan approved. So those 2 things are the key things they use. Your credit score and your debt to income score. Together, that's, I think, about 80% of the decision they're going to make on your loan. So yes, I think they do follow exactly how the Americans do it. So what it means is that you've got to make sure as an individual, you are looking at your credit scoring. Even if you don't want to get a loan, I think you can get a free credit report from the bureaus. Take a look at it. Make sure there are no inquiries on your report that you did not do. So if you pull up your loan and you start to see a loan inquiry from a bank, but you didn't go to that bank to apply for a loan, you want to reach out and say, this was not me, so you can basically find someone trying to do identity theft on you and you can close out that loophole. But you have to make sure you keep tabs on your credit report because that's what the banks are going to use to say yeah or nay to your loan application.
I mean, what you just said now takes us to a very important aspect. During the COVID-19 pandemic, we did see fraudsters go after credit cards and so on. What's the risk of not protecting your credit score? Should it land in the hands of imposters, impersonators? What does this mean for you? We've heard and seen some criminals, as it were, holding on to cards, credit cards, and using it to live la vida loca, flourish lifestyle, and so on.
That's a very, very dangerous thing, right? Because if your identity gets stolen, you can get the money back, but it's very difficult to unwind your name or your social or your NIN that's being used for fraud. It's very, very difficult. So the best thing is not to get your identity stolen and to be used. I don't know if we have credit freeze in Nigeria. I know in the US and the UK, they have credit freeze where you can lock your credit up, and before someone can apply for a loan, you have to use like a PIN or a password. I hope we do in Nigeria, because that's going to be very, very essential. If you're not using your credit, you don't want to take credits, lock it up. When you want to use your credit score, then you then go apply your PIN and open it up for a week and apply. But once your identity is stolen, they flag it. I mean, in the US, there's going to be a flag on your account, and it's there for almost forever. And so it makes people ask you more questions. When you want to get a card or you're at the airport, they are looking at you funny because your identity has been stolen. They're trying to help you, but because it's been stolen, it's flagged. So you want to avoid that as much as possible. If you don't need a loan, don't apply for a loan. When people go online and say, click here for this survey, don't click there for that survey, and pull your credit report, I would say twice a year. Take a look at it and make sure there's no inquiry you're not aware of on that report. Yeah.
Okay, for people who also have never gotten any form of credit before, is it safe to assume that someone who's never taken a loan, who's never used a credit card, has a great credit score?
No, you just have no credit, which is bad. So as soon as you can, as young as you can, try and get a loan. Even if you don't need a loan, try and get a 1,000, 10,000 naira loan and just pay it back on time, so that it registers you as a good credit borrower. You just have it on file. You borrow 100K, pay it back every month. It's going to register for you at the bureau. So when you really want a loan, they have a file on you, and that file shows that you borrowed and you paid back on time. It's easier abroad, right? You can get a credit card and just pay gas to the credit card and it registers for you. Nigeria, not so much, but if you can, I would advise, if you want to buy a consumable, just to register, buy a small, maybe like a small phone that you just put half of it on credit, right? Just so it registers. That's good advice for you, so that it's you are in the system, and when you really need credit, they already have your record. They can pull you up, and you have a pretty good score there.
That's pretty great advice, because I'm sure many people have never, borrowed money and don't even know how to even kickstart having a credit score in the first place. So thank you so much for sharing.
Thank you so much.
And for giving us the, areas not to
break
cross.
down.
I'm sure my co-hosts, because I've been a very wonderful team player, they'll come together, get credit to buy me my next.
No problem, Olive. No problem. I also suggest that we have a sort of social credit bureau, non-banked, non-institutionalized, because many a times I find myself in Ajo, and then there are people with dubious reputation. When it comes to my turn to pay,
you don't want to talk about that, Joe.
They will now start giving excuses.
Last point, Ajo is wonderful for discipline, but if you're not going to be first or second, don't do it.
Ajo is low-key MMM.
You know the funny thing? I was the last. Benga was the seventh. Benga escaped. I'm so...
Yeah. It's very good for discipline. But because you are compounding without earning, it's a waste of your money. Because if you take sixth, you're giving guys an interest-free loan. Your money is like in a bank without paying you interest. You can now, we've got money market funds. You can do a job with yourself. You can open a money market fund, and every month you contribute to money market fund, and it accumulates. Then you take those funds and you do something massive. Wonderful. You don't have to do a job again, yeah.
Or like you've advised, if you're the first or the second person, as soon as you collect your money, quickly go and lock it somewhere with your money market, so that it's generating interest.
If you do a job and you're the first, this is only for the guys that watch Breakfast Central. If you're the first, do a job. If you're the second, do a job. If you're third, don't do.
This should be our topic for next week. Ajo or Isusu.
Actually, now I'm looking for a job to do.
You are looking for who to
We can do 3 of us. No, I'll take.
I'll collect
Yeah,
first.
whoever is
I'll
first.
take first. Benga takes second.
I'll
I
join
don't
you
trust
guys.
you,
We
Olive.
can
You
do
travel
like
a lot.
$100 or something like that. I'll go first.
Mr. Kalu, thank you so much for joining us. We'll
you.
start from the lowest of the lowest and then we'll climb.
Please, I'm
Or
not
you
doing
take
lowest
last,
with you.
maybe, so that.
Oliver, what do you carry?
I'd
My
have
small
gone
in
with
your eye.
Olive, but she travels a lot
All right,
and
thanks,
she's always
guys.
changing
Wonderful
addresses.
being here, so.
Thank you.
Thank you.
Thank you.
All right, so when we're doing this, Joe, who's taking? I think I like
I'm not.
I did
joking. Now I
that
want
job
to
with-
go
I did that job with Benga for
few
in the same
times,
few times.
Did you get your money?
Yes,
Of
I did.
course.
We didn't have any issues, but
How much? How much are you
But
proposing?
I agree. We can't say
We
that.
can't
on
disclose,
air.
please.
We can't
Don't put
disclose
me
that.
under security risk.
Rich kids.
Top 10,000 naira.
Rich kids of
Security risk.
Ikeja.
Let's not go there, please. Let's keep it
All right,
confidential.
we're starting
Oh my
breakfast.
goodness.
We'll announce the details.
The
before
phone
the-
lines will be opened. Let's open the phone lines for all who can call in, and as we go straight to the front pages of the newspapers. But let's take a break
A
first.
few comments. I think somebody said,
Oh, okay.
do not take a don't
said
take a
Benga.
loan to pay your girlfriend's.
He said, don't borrow to buy phone for your babe. That's
a
what
solid
Mokuye
advice.
Chukwemeka said.
Dear men,
But can I push back on that a little?
what do you mean push back?
Because he said, do not borrow to buy consumables. You should borrow something that will generate interest for you. When you buy phone for your babe gives you love. Your babe gives you peace of mind. Your babe gives you joy. Nothing is too expensive for your peace
So
of mind.
what if other men are buying her things? How would she now divide her love?
It
and
depends on
attention?
if she is from Delta State where she has a big heart.
Okay,
You know,
the
Delta
big
State,
heart
the
of
big
the
heart.
nation.
You have space. Everybody has compartments. Please, oh, I don't endorse this now, joke. Let's go on a break. We'll come back and review.
I was wondering, I was waiting for you to finish. So I can ask, is this endorsed by Lady Olive? Like they call her?
Break time. Thank you.
We'll go on
Bring
a
bell for director.
This segment was brought to you by Zenith Bank.